Gold has started the year 2025 on a good bullish note. We have seen it hitting the highs at 26.65 before erasing some of the gains and closing the week at 26.40. Can we expect the bottoming is done for gold? Can we expect a round of rise here? Or it is going to crash below 2580 and we are looking forward to the lows at 2500? What is going to be our strategy in order to profit trading gold in the coming week? We're gonna see with the help of charts and indicators. This is a weekly review. I do share my daily updates, in fact, twice a day with logical levels so that you can trade with profits every day. Thus, subscribe, press the bell icon, do like, share, and comment. Join the free Telegram channel for live updates and join the channel memberships here on YouTube to support the effort. Towards the end of the update, I'll be sharing the levels, so do watch till the end. And yes, coming week, we have the key data coming in from across the globe. The most important one is the non-farm payrolls data, which is going to get released towards the end of the week on 10th of January, which is definitely going to bring an impact here in the gold prices. And how to profit, let's see. First thing is, when you look at the movement here in gold, you can see this rise retracement, another round of rise and then retracement. So this is the third wave which is going on here, and if you align the highs and the lows, it appears that gold is trading in this channel. So is the bottoming done? Can we expect a movement towards the highs? When you look at the highs are now towards 2900 and 3000 levels. And for it to do so, the key levels on the upside for it to break are 27, 24, 25 and 2750. If these two levels are taken, I think we are looking forward to a massive rally. But right now, the movement is not very much supportive of same. If you look at this, see, this is how it has been trading. The third wave is done and it is looking forward to a breakout. I will wait for a breakout. Till then, I will not be treating gold as either bullish or bearish. Look at the formation here. See, first of all, a reversal sign, couple of strong bearish candle, a massive bullish candle. Now, what has happened since then after delivering such a bullish move? It is consolidated here. It has retraced. It has shown a consolidation and first reversal sign is up. Now, in the coming week, two critical levels, because I can also notice that the preceding these two candles are almost identically symmetrical. The highs are beautifully aligned. So first it needs to break beyond 2665, 66, then 76, 78, and then 2685. If these three levels are taken in the coming week, you can say that the bulls are back and we can look forward to a move towards 2704, 2724 levels. And if these two levels are taken, the most critical one on the upside is at 2750. Remember, any point of time, gold in the coming week breaking beyond 2725 and 2750 zone, just stay bullish for the near term. Gold is looking forward to a rocking. But what does the indicator say? Let's have a look. The same is getting observed on the indicators as well. See, this is the second time, this is the third time, 20 period moving average proving out to be a greater support. And right now, 2600 and 2580 are the two levels which I'll be looking at. If these two levels are taken, consider that as a massive reversal. And yes, any drop or any closer below these lines will invite bears for the near term, where we are aiming at 25, 20, 2500 levels. So right, what we are seeing is 20 period moving average is proving out to be a greater support, and this also indicates how critical it is for gold to trade below 2600 and 2580 levels. This zone is going to remain critical for any directional or positional trade for gold. Look at the stochastic on the weekly charts. It is dropping here. It is looking downwards. The MACD has also crossed over at the top. It is trading with divergence, and see, this drop is coming from an extremely higher levels, though there is not much of downside available. But remember, even if it tries to converge for a couple of candles, even if it shows or delivers a couple of bullish candles, it hardly matters. It may still remain in the bearish territory. But yes, two to three bullish candles here and it will be back in the bullish, or it can achieve record highs. So both things will be done. The MACD will be cooled down as well, while the prices can achieve the record highs as well. So this is something which I am being watchful of. RSI has also come out of the overbought zone. It is now looking downwards. But this is just on the weekly charts. Let's have a further look on the before we come to the daily charts, let's have a look on the month. Now this is important on the monthly charts. Look at the preceding two candles. Lower highs are consistently seen, higher lows are seen. And thus, as long as now 27, 25, 27, 50 zone is not taken on the upside, we will not be treating gold as bullish for the month of January. Yes, hitting the highs at 2700, 2720. Also it can reverse and it can still stay in this swing zone. Now see what is happening here. First of all, on the monthly charts there is still lot much of room for gold to cover on the downside. See, it is trading with divergence from the 20 period moving average, and whenever you see such divergence, the chances of conversion increases. Notice what we had seen on the weekly charts: rise, retracement, here also the same rise, and now the second leg of retracement should begin very soon. So on the monthly charts, the picture is suggestive of something different, and the month of January is going to remain critical, and the levels at 2700, 2725, and 2750 are going to remain equally critical here. Now notice this, it has already formed the wick here for the month of January. Now if it trades below first 2580, then 2560 levels, you can expect that we may see this time 2500 as well. Why? See, this has formed the highs. It has started on a flat note. It can at least show you a swing here. So there is a possibility that 2600, 2580 should be there in the month of January some point of time, and any break below this should invite lot much of bearishness here. I will still not treat this as bullish as long as 2720, 2750 zone is not taken. Now which possibility is more? Now if you look at these two candles, definitely bearishness has got diminished, but I will say it is still bearish. It is not yet confirmed a reversal here. So as long as 2750 is not taken, we should not be treating this as bullish. Second thing is the divergence of the price from the 20 period. This calls for it to start converging very soon. Now see, the monthly stochastic was overbought. It is looking downwards. It is trying to suggest bearishness. Look at the monthly MACD. This is also at extremely higher levels, and it is showing now signs of conversion. Signs of conversion means, look at what has happened here. It has started to converge and then the dip has appeared. The same thing is appearing here, and this time if it crosses over, it is going to lead to a bear run for almost a year or so. So the month of January is very critical, and as I said, first there is a possibility of 2720 to 2750 exist, but I will say till 2750 I will not be treating this as bullish. Beyond 2750 it is not going to come back, and as long as 2750 is not breached, you can stay, you can expect that gold prices might correct, gold prices might drop again. That is the first part. Second part is on the downside. Whenever you see it trading below 2560, you can just expect that 2500 anyways is there, and then this is also confirmed that it is going to turn bearish for the near term once it trades below 2560, 2540. We are looking forward to 2400 as well very soon. It may take 2 3 months, but right now I will say it is very early to conclude. Look at the monthly RSI. This is also overbought. This is what has happened the last time when we had seen gold hitting the higher overbought zone, and this may get replicated here again as well. So on the monthly chart, signs are not very much encouraging for such a stronger rise. Now look at the daily charts. On the daily chart, similar observation: drop, retracement, double top here, and then now it is trying to create a bearish channel of its own, lower highs, lower lows, where the lows could be far below towards 2500 possibilities there. But the key support levels which it needs to break first is now here on the daily charts is at 2620, then 2600, then 2580. These three levels, if it takes, you can say that the bears are back. Collect the highs here, you will find that it is for the near term it is under retracement, and for the coming week we have to wait for it to trade below first 2620 and then 2600 levels, which will confirm a massive reversal. Stochastic at top, the MACD. On the MACD, if you look at on the daily charts, crossing over here, it is trading with divergence and bullishness. RSI has dropped. On the 4-hour charts, the moving averages have crossed over here. This is a good bullish sign. The prices were trading with divergence from the moving average. It has come down to take the support here, and taking the support, now it can bounce back up again. But I will say, and it breach below the 2050 period moving average, specifically below 2620 and then 2600, you can say we are looking forward to a massive correction, drop, retracement, a breakout out of this channel should lead to a stronger move than this. Now here the correction was more than $140, and if it breaches out here, it can, if it delivers $100 or similar size of move, it is going to be towards 2500. The stochastic has dropped. The MACD is willing to cross over the RSI. So now time for me to give you the trading strategy and levels. And before I provide you the levels, if you want to learn this art of trading, join my mentorship batch. If you just want to trade as per the signals, be a part of my signals channel. Connect with me, write an email, ping me or telegram for your queries. And if you're looking forward to a broker which offers you a swap-free account with lowest spreads and no hidden charges, easier transactions and easier withdrawals from across the globe, you can find the recommended broker link also in the channel and video description. First thing is where to buy in the coming week. You can buy here at 2644 itself. Now see, notice the resistance levels on the upside remains intact. Those who follow me regularly must know these levels by now. So till 2665 it's fine. We have got very good resistances. It can go towards at par levels from the last week and the preceding couple of candles here. Beyond this, you can expect 26, 76, 78. The next milestone, and then 2685. Now see, this time if 2685 is taken, stay bullish. We are looking forward to a greater rise towards 2704. And if 2704 is taken, then 2720, 2724 should appear. This is going to be the most biggest hurdle and the strongest one on the upside if at all gold shows any up move, while 2700 also is a good resistance zone. Beyond this, we are looking forward to 2750. And if any point of time gold this time is seen trading about 2750, these levels are applicable for the month of January complete. Yes, if it stays above 2750, stay bullish for 2800. It is going to move towards the record levels at 2800. Then I will expect 2833, then 2856, and then 2900. I do not see it moving beyond this, and at least even if at all it shows any signs of bullishness, I do not see it breaking beyond this. On the Now this is on the buy side, and I think even if it tries to rise, I think it is going to be difficult to break past these levels. These are going to remain greater hurdles, but favorable data and supportive geopolitical environment might pull out a rally. Though the rally in dollar is restricting the gold move in gold right now, so you have to be strictly aware of what is happening on the geopolitical front and on the currency part as well. Now on the down, I will recommend a selling entry at 26 30 32 levels. This is going to be the prime support zone, and then 26 24 20 zone. This is going to be the next strongest support zone. Now if these levels are taken, you can stay short. How far you can stay short, you can look forward to see, though the support levels at 26.8, 2608 is very strong, but ideally below 2620 I will be looking forward to 2600 levels here. Very good support here below this 2592, and then 2584. Once this is taken, next movement is towards 2564, and if this is taken, 2540 levels should appear. Below 2540, stay short for 2514 and 2498. Below 2498, we are looking forward to a greater correction towards 2450 levels soon, though the signs are not very much encouraging here for such a stronger correction. But yes, once it breaches the support levels, now let me mark the critical levels on the upside. This is one critical level, this is another one, very important, another important level. This is very important, and this is the most important one on the upside, because beyond this I will be 100% bullish. Beyond 2750, if gold stays, I will be 100% bullish for the near term. For at least 2 to 3 months we can see a rise here in the gold prices. While on the downside, see, as I've shared in my annual review as well, I'll be looking forward to a correction in gold prices in the year 2025, and thus the probability of downside increase and any drop below this and this. These are the two levels below which more bearishness. This is the level below which you can say now the bears are back in action. We are looking forward to a trade below 2500. The chances will be very high that we may see gold prices moving towards 2400, 2300 levels very soon. Take your trades accordingly, take your positions accordingly. Like, share, subscribe, and comment. Join my mentorship batch, join my signals channel. Reach out to me for your queries. Join the free Telegram channel for live updates and the channel memberships here on YouTube to support the effort. Thank you very much. Have a great profitable trading week ahead and a happy weekend.